Hi, my name's JE Warr. I'm with Second Chance Hope Group. We're a charitable organization that started out just teaching prisoners while they're in prison in Texas how money works. So when they get out, they're armed with the information they need to become successful. These are going to be quite a few tutorials that have to do with finance from A to Z. So after we did that for a little while, we started expanding and going into indigent centers and women's shelters and really any kind of group that needs our type of simple education about how money works. So these financial tutorials, the first one we're going to do is on income tax because the federal government, I think they do it on purpose. They write the rules and regulations, and they have lawyers write the rules and regulations, or accountants write the rules and regulations, so average people can't hardly understand them. There's too many exceptions. There's this and that. Now, I'm going to sort of simplify it here so you get a basic understanding of that, but also you need to understand there probably needs to be some more information. Uh, First of all, I highly recommend every year, if you've never filed taxes, this is your first time filing taxes, or you've been filing taxes forever, I highly recommend that you take advantage of some of the services out there. You can go online and do that, but they also, I notice at Walmart, they're always having, during tax season, they get people there that can help you. And so when you're going to these tax people, you need to understand the system so you can say, do I qualify for this? Do I qualify for that? And they'll run it through their computers, and that should really help you uh, actually profit from doing your taxes. So you should always file them. It's against the rules, against the law to not file your taxes. You might get away with not paying your taxes for quite a while, but don't think you can get away forever with not filing your taxes. And I'm going to show you the reason you want to file your taxes, because they pay you to do it, especially if you're low income. If you're high income, there's certainly ways where you can make a profit with taxes anyway. And so what I want to do here is let you know this is a beginner course. This is a course just to get you started in understanding how money works. And I'll tell you this at the end also. The most important thing you need to understand is I'm here to help you. If I can help you, I will. So I'll have my contact information at the end. If you want to give me an email, email me and tell me what your problem is. If you want to talk to me or you want someone to talk to me, have them email me, and we'll set up a time where I can talk to them on the phone. Everything I do, there's no charge. So this is a charitable organization. If anybody out there is watching this and wants to volunteer to help us spread the word, teaching these classes to women's shelters or in prisons or just to any group that needs it, I would sure like to talk to you and make you one of our preferred local providers, which is people that help other people. So let's make a difference. And if you're interested, go to my webpage at secondchancehopegroup.org, secondchancehopegroup.org, and look at the things we're doing. And if you could help, we could use it. So let's get on with our first class. I don't understand why they do this, but the IRS likes to hide the meaning of their rules by putting these funny names on things. So we're just going to have to go through, and there's only 3 or 4 of them that we got to really educate you on. And one of the first one is the standard deduction. So let me break down what the standard deduction actually is. So If you're single or married filing separately, you get to make $13,850 before they start taxing you. If you're married filing jointly, you make $27,700 before they start charging you a tax. If you're head of the household, $20,800. So with a standard deduction, that means that they're going to take off whatever the standard deduction is from what you earn, and you don't pay taxes on that amount of money. Now, this is a great deal because you're not paying taxes on everything you earn. You're only paying taxes on a percentage of what you earn. You gotta think about this like it's a discount, okay, on your taxes. Imagine you earn $20,000 a year, and the standard deduction is like saying you get to subtract a certain amount from that before you pay your taxes. So if the standard deduction is $13,850 for someone who is single filing in 2024, you only pay taxes on the remaining $6,150, not the whole $20,000. So this lowers the amount you owe in taxes. The next thing I want to show you is something called an earned income credit. The earned income credit is the reason you want to file your taxes. So if you're married and you got a couple of kids and you made $20,000 last year, you don't owe any income tax, but guess what the IRS is going to do? They're going to refund you some money that you didn't even pay. This is like pennies from heaven. They're going to send you a check for $7,430 earned income credit. Now you understand why I tell you you got to file for your taxes. It gets better. Okay, the next thing we want to look at is a child tax credit. The child tax credit means the federal government's going to actually pay you for taking care of your kids. So for 2024, the child tax credit is worth $2,000 per qualified child. $2,000 for qualified child. For two children, that's a total of $4,000. Now, some of that can come to a cash refund, not a cash refund, a refund from them. They'll send you a check up to $1,600 per child. That's $3,200 refundable even if you owe no taxes. The rest of that money goes to reducing your taxes if you owed some. So since you don't owe any taxes, that's another $3,200 you're going to receive. You understand why I'm telling you filing your taxes is a good thing to do. You just got to file. I mean, that's a lot of money all you got to do is file. So the thing is, if you look at this, you're going to, with the child tax credit and the earned income credit, maximize the amount of money they're going to send you back. Participating in income tax when you're low income can be very, very profitable. Now, I know I run through a lot of these things, and there's a whole lot of variables that go in there. So I think what you're probably going to have to do is go through these slides several times until you understand what this is. And then I got one more suggestion for you. Contact me. Let me break this stuff down for you. Let me make it simpler. It's hard for me to take your particular situation unless I know what it is. So just be assured that if I can help you, I will. So the best thing to do is email me, je@secondchancehopegroup.org, and I'll email you back. If you want to talk to me on the phone, email me, and let's set up a time when we can talk. So if you want your spouse to talk to me, email me, and we'll set up a time. Or if you want to just get the information over the internet, I can do that too. But these series will be coming out about every week. So the best thing to do, I think, is watch each one a couple of 3 times until you think you got it down. And if you have any questions, email me and we'll make sure it gets straight. But like I said, if I can help, I will. So this is JE at the Second Chance Hope Group, and I'm trying to make a difference. And if I can make a difference in your life, I feel better. So make me feel better. Let me help. Let me help you understand finance.